All right, I think we can go ahead and get started. Looks like a few more people are trickling in, but we do have a busy session. So thank you for joining today for our third session of the fall 2024 Cal Sol Board of Governors series. Today we'll be going over quality and performance management as well as finance. And we have two special guests who will help us present those. Just a couple quick updates before we dig into those sections. Here are a couple of resources you can use for last week's session. Rick was able to find a couple books online that he felt would be helpful for both the governance and the ethics portions. So we'll send these slides out at the end of the session, and there's links there for you to be able to access those resources. So first today, we will be presenting on quality. To help us with that, we have Navi with us. Thank you, Navi, for joining us today. Navi is a manager of integration at Sutter Health. She also lectures at Cal State Chico. She is an executive board secretary with Cal and has held many roles with Cal and will be moving into a new role next year. So thank you, Navi, again for joining us, and we will hand it over to you.
Thank you, Ryan. Good morning, everyone. And thank you for having me join on this Saturday, and happy Saturday to everyone. I hope that we can spend a little bit of time on this particular slide just to kind of give you all additional context. I know this is knowledge areas that are highlighted in the ACHE exam outline, but what I'm going to do is I'm going to put in the chat a book that I use, textbook that I use for teaching healthcare quality at Chico State. And I find that this textbook is really great because it goes into further detail around these knowledge areas. Folks that I've recommended this textbook to in the past who've taken the Board of Governors exam have found it to be really helpful. So a great resource for all of you. And you're always welcome to reach out to me if you have any questions. So with that said, let's start with benchmarking. The knowledge criteria highlights benchmarking principles and sources for best practices information, internal, state, and national standards. I just want to really quickly highlight kind of the purpose of benchmarking. Benchmarking is a way for us to be able to assess and compare our performance. And it's really the core of performance assessment. So when it comes to assessment, it's really to understand how are we doing currently, and then to be able to take that current performance and compare it to your competition in the marketplace. I personally believe quality to be one of the distinguishing factors to be able to gain market share. So if you're known for providing high quality care, that can help you to keep your members. Understanding performance can be very critical, and being able to compare it with others in the marketplace can help you understand where are the areas of gaps that you need to improve on. For this particular exam, I know that you have many areas to cover, and it can be challenging with timing. So if you're looking for anything in particular to focus on with benchmarking, I would say look at the CMS used for value-based purchasing. That can be a really good understanding of how benchmarking is utilized from a CMS perspective. With benchmarking, last couple things I'll mention is that there's very many tools in healthcare quality. Down below, you can see Six Sigma, Lean, that can really help to do some process improvement work. But really, again, the overarching goal with benchmarking is to be able to understand how are we doing today and how are we doing compared to our competitors. And then, of course, the various methodologies, Lean, Six Sigma, can help you to incrementally improve your performance to be able to fill the gaps that exist. The next area to cover is risk assessment principles and programs. So when I think of risk, there's actually a really great chapter that highlights patient safety and risk in the textbook that I put in the chat. But when I think about risk, I really am thinking about how do we protect the organization from financial losses that may be the result of exposure of risk. So there's various different ways you can do that. One that comes to mind is no fault reporting. So again, various different ways you can promote risk reduction or minimizing risk in the organization through practices and policies. Knowledge of process improvement tools and techniques, plan, do, study, act, lean processing, and Six Sigma. When I think of this criteria, I'm thinking about tools. So these are all different tools and different methodologies that can help you to get your organization's performance to where you want it to be. When it comes to lean, I think of reducing waste. So there's 8 types of waste that lean aims to reduce. Six Sigma, on the other hand, looks at enhancing performance to get it aligned through reducing variation. So very similar methodologies, but one looks to reduce waste in the process or in the system, and the other looks to reduce variation. Both are aiming to develop a really good product, a product that can be relied upon for the organization. Both require a particular mindset and support from your organization leadership. And again, plan, do, study, act, or plan, do, so PDSA or PDCA, very similar methodologies are utilized to implement ideas that you can test to see their effect on the problem that you're trying to tackle. The last one is utilization review case management. There, again, in the textbook, there's a whole chapter that goes into utilization management requirements for health plan and health organizations. And they're largely for hospitals and any federally funded patient care settings like long-term care facilities. And utilization management as a whole really requires that your organization does planning, organizing, directing, and controlling healthcare products in a cost-effective manner that really maintain quality of patient care and contribute to the organization's goal. Again, the textbook goes into much further detail around this, but there are requirements for your organization to follow depending on where in the criteria of the organization you fall under. So I'm happy, again, to answer any additional questions if they come up in the chat, or if you want to reach out to me directly. But with that, Ryan, we can go on to the very first question, I believe. And Ryan, what we can do is maybe read out the question, give folks a couple minutes to answer in the chat, and then go through the process of determining what's the best answer. Does that work?
Sure. Do you want me to read out the question and then you can go through the
Sure.
answers? Sounds good.
I'll open up the chat here.
So critical paths are important because they go ahead and take a look at those answers, and then if you want to post in the chat what your thoughts are, and then Navi will go through.
Maybe we'll give it 5 more seconds. I'm seeing a few answers come through the chat. Bachna, B not C, Sam C. So let's go through each of the options for the responses here. The first one is provide support in malpractice suit. Sure, they could do that, but is that the primary focus? Jackie B. And then let's go through option B, which is to delineate best practice protocols. That sounds about right to me. If I'm taking the exam, that sounds about right to me. I would probably say I'm between excuse me, I'm between B more than I'm in with A. So let's go to C, increase patient throughput. No, that sounds like patient efficiency, patient flow. I'm probably going to cross out C. Reduce resource use. They could, if again, being aware of knowing a little bit of the definition of the term, that could be an impact, but is that the primary focus? I would X out D, so I'm between B and A. Between B and A, I want to know kind of what's the primary focus of critical paths. And between both of these, I want to target what is the primary focus rather than what could be the secondary or the what could be the impact of the critical path. So between B and A, I would lean towards B. And do we want to reveal the answer for the audience?
Sure. It is
Great.
B.
Yeah. So again, it requires a little bit of just knowing on the exam. I know there's going to be some just terms that you have to know, but critical paths are really just kind of the optimal sequencing and timing of interventions by your clinical team, so your physicians, your nurses, and any other staff. So when I think of that, I think of it's probably delineating what's the best practice protocol. So what are the paths that they need to follow? Let's go on to question number 2.
So which characteristic of high risk process would tend to increase the risk of a process failure?
And we'll get answers in the chat here. C, Mel, C, Stephanie, C, Aziza, C, Sam, C, Jackie, C. Just give it maybe 5 more seconds. Rachna, C, Angela, Kathy, both C. So I'm seeing a lot of C's come through. So let's go through kind of step by step how we would answer this. So again, starting with being really careful to read the question. Which characteristic of a high risk process tend to increase the risk of a process failure? So it's saying I think the natural response that we have sometimes is to reduce. So in this case, it's asking, what would you do more of that would also add more risk to the process? So anything that would make the process less risky, excuse me, would not be an option. So we have to just kind of keep that in the back of our mind as we're answering this question. So if I go to option A and it says some simplicity, well, if I have a simple process, that's probably going to help me with reducing risk in that process. So it's probably not the answer. So I would get rid of A. Consistency, similar thing. If there's a consistent process for my team to follow, for example, my front end check-in reception team to follow, and they're following that process every day, that's also not going to increase my risk. It's going to decrease my risk. So I would probably get rid of B2. Variability, that sounds about right. So if I have 5 different people following 25 different processes, that's probably bound to lead to some kind of failure to happen in the system. So I'm going to keep that one. And then automation. Anytime you have automation, you have less risk. Anytime we can take the process out of the hands of humans, it can help with ensuring that, of course, the automation is set in the most appropriate way. It can help to reduce with some of the risks that are associated with human carried out process. So I'm back to variability. And again, all of you in chat got it perfectly right. Anytime you have variability in the system, there is more risk in the system and in the process. So it goes back to the Six Sigma principle. Anytime you can reduce variation, you can bring the process as close to the mean, the more likelihood you have of there being a consistent process and high quality process. So great job. Yeah, great job, everyone. And we can go on to the third question here.
In conducting a risk assessment, what would be the first action to take? So it's looking for the first action. Looks like we're getting some A's.
Kathy, Angela, Mohit, Stephanie. It's like we're getting a lot of A's. We'll just give it maybe a few more seconds for others. Jackie, undecided D or A. Mel, between D or A. Okay, so let's go through how we would want to answer a question like this. So the question asks, what is the first step to take? So let's keep that in the back of our minds as we're going through each of these options. So identify the steps in the process of concern. That sounds to me a good place to start. And I'm thinking about it from the perspective of I am either a PI consultant or maybe a PI leader, and someone has come to me and said, we have a really awful process in area X. So, and I don't know anything about area X. What is sort of an area, or what is kind of the first step that I can take? Identify the steps in the process of concern. So maybe starting out with something like a process map or a flow chart to help me kind of just understand what the current state is. Let's go to B. I'm not sure about A. I'm just keeping that as a potential. Identify what could fail in the process. Well, I can't say what could fail in the process if I don't even know what the process is. And I, as an outsider, most likely won't be able to identify what can fail in the process. And I think that's really important for us to keep in mind, is that likely we to get that information from folks that are carrying out the process day in and day out. So maybe, probably not. C, identify causes of failure in the process. Whenever we're doing sort of any sort of assessment type of work, I always think that we should not start out from a place of blame. And let's not go in with trying to figure out who to point a finger at. Let's just go and understand what the current state is and work with the right stakeholders to understand what can be improved upon to ensure that we have really a right approach and a solid system in play so that folks can carry out the process with all the protections and the right paths to lead them to the end product. So maybe not. Identify priorities for action. Identify priorities for action. So I see that in the chat, some of you are between D and A. I encourage those that are between D and A to really kind of think of this as kind of what if I have no idea, and I have no idea of the area that I'm focused on, where do I need to really start? Even identify priorities for action, I would need to know a little bit of what's happening today. I would need to work with the folks who can tell me what would get me my wins immediately. I can't really know that unless I know what the sort of what the steps are, what the current state is. So But again, I can understand being between D and A. So Ryan, do we want to reveal the final answer?
It is A.
It is A. And Jackie has a comment. The wording is tricky here. What are you trying to solve here? Yeah. Jackie, do you want to come off mute and maybe share your perspective?
I thought D could be actually first or last, the way it was said, because when you're trying to do a risk assessment, like what is the problem? Is something failing? Are we, what are we trying to solve? But then it could also be the last step in that we've identified all of the other risk assessment components and what do we do now, sort of. So I probably would have lost that point, but I just wanted, it was tricky for me because I didn't really understand. I guess I needed to study risk assessment. I didn't really understand if it could go at the beginning or the end.
Yeah, and you're completely right, Jackie. These are really tricky questions, right? So I think to your point, it could be the last thing, or it could be the first thing. But I think one thing to keep in mind is that if you always adopt this mindset of, I don't know what I'm walking into, and I really just need to understand the current state. I need to know what's going on today before I can take any action. So I think in that perspective, it's just to be able to have a sort of non-bias, the way I like to describe it is to have a non-bias approach of saying, I'm just coming in and I'm observing without trying to come in and implement something that I don't know if it's going to work because I haven't actually seen where the gaps are today. So I hope that helps. Ryan, we can go on to the next question here.
Okay. So in designing a risk management program for your organization, what approach would have the most impact on reducing risk?
I'm starting to see responses come through the chat, so I'm seeing a lot of B's. Just give it maybe 5 more seconds for anyone else that wants to throw their answer in the chat. Okay, I'm seeing few D's. So let's take a look at this particular question. Oh, one more response, B. So sounds like we're between B and D. So let's go through this. In designing a risk assessment program for your organization, what approach would have the most impact on reducing risk? When I think about this question, I'm thinking about it from the perspective of I am trying to get ahead of something happening versus aftermath. So keeping that in mind, let's look at potential answer number or letter A, developing a reporting system for medical errors and injuries to staff and visitors. Sure, that can be helpful, but is it going to help reduce risk? Meaning, can it be something that I've done in preparation for an event happening or to reduce the risk of that event happening? No, because this sounds like it's more of aftermath. So something has happened, an error has happened, or an injury has happened. Now we're collecting the information related to that. So it's not going to help me prevent it. It's going to help me collect the information and the associated data after it's happened. So maybe not A. Require assessment of high risk areas or processes within each service, department, and unit. That sounds like a pretty darn good option to me. So again, coming in with that mindset of what's going to help me reduce risk this could be a really good option. Let's go on to C. So I'm crossing out A, I'm holding on to B, going on to C. Use task forces to address key Joint Commission standards that apply to risk assessment. I don't know. I think this one is probably not it, because it's not going to ensure that we're doing anything as an organization to reduce risk. So it doesn't sound like it's the right answer for me. Educate staff on potential risks and patient safety practices. That could be helpful. And I'm between B and D, and a lot of you guys in the chat were between B and D. And we have to go back to this idea of would have the most impact on reducing risk. And Ryan, do we want to reveal the answer?
It is B.
B. Yeah. So just understanding what are the areas of risks to be able to maybe even implement ways to be able to reduce risk within those areas, or just having a level of understanding. You're educating educating the staff on potential risk areas and patient safety practices can be really helpful. And yes, you should certainly do that, but it probably will be less impactful than your option in B. Okay, Brian, do we want to go on to 5?
Sure. What action should you take to ensure that all critical activities associated with care of a patient are being carried out in the right sequence in your organization?
I'm seeing a lot of D in the chat, and then Rachna is between B and D. Oh, and someone is Stephanie A. So we'll just give it a few more seconds. All right, so this one, one more. Aziza is A. So this one to me, Ryan, sounds a little bit like I just need to know what the definition is. So for those who are studying for the exam, if you haven't already, there is a sort of a flashcard deck that you can get off of the ACHE website, or maybe even borrow from someone, beg, borrow, or steal from someone who's already taken the exam and has that deck. And in that deck, there are just a list of definition, or there's definitions that you just want to kind of maybe go through and memorize. So this sounds like one of those questions where I would just need to know what the definition is, because if you're not in healthcare quality kind of day in, day out, these all sound very similar. So institute clinical practice guidelines, sure, develop clinical pathways. That can be maybe a hint, because the question is asking activities that are carried out in the right sequence. So hint there. Institute a disease management program, probably not. Develop an evidence-based management program. So Ryan, do we want to reveal the answer for our audience?
It is B.
Yeah, so this is one of those questions where you just want to know what a clinical pathway is and know the definition of it. But clinical pathways are really tools that are used to guide evidence-based healthcare. They aim to sort of translate clinical practice guidelines recommendations into clinical processes. So again, if you haven't already begged, borrowed, or stole those cards, those study cards, please look into those. Those are extremely helpful in just memorizing definitions in the various areas. All right, Ryan, do we want to go on to question number 6?
Your medical staff on the general medicine unit has been complaining about the delays in the administration of medications. You study the processing times on other units and indeed find that the general medicine unit times are considerably longer. What would be your first step to take?
I am seeing a lot of D's come through the chat. Let's give it 3 more seconds and then we'll go through this. B, watch not D, but B could work. Just give it a couple more seconds, see if there's anyone else. All right, so let's look at the question. The question is essentially saying one unit is doing better than the other, or one unit has performance issue. If we were to summarize that, the first few sentences, what is the first step that you want to take? A, implement best practices from other units. Probably not. Not my first step. It could be a step I take, but not necessarily my first step because I don't know what's wrong with this unit, what's happening on this unit. There could be some special criteria, special circumstances that are preventing this unit from performing as well as the other units. So probably not my first step to take. B, have the manager from the highest performing unit assist the general medical unit in its improvement efforts. Sure, but again, is that the first step that I want to take? Maybe, maybe not. It's similar to A and B, excuse me, both A and B are similar that they are steps that I may want to take, but they're probably not the very first step that I want to take. So I can get rid of those two. Establish benchmarks for processing times across the organization. That just feels odd to me, to be quite honest. It's, you know, if I see that one area is performing not as well as the other area, I'm not sure how establishing benchmarks is going to help me eliminate the issue that I'm having. As many of you answered in the chat, organize a process improvement team in the general medical unit. I, as sort of a PI initiative, one of the things that I like to preach is that if you want to do any sort of improvement work, it's important to really start with the mindset of, I don't know anything. I'm here to just watch and learn. And then to be able to also involve the teams, or the members of the team who you're going to impact. So I like D the best out of all of those. Ryan, do we want to reveal, drum roll reveal the, yay.
It is D.
So D, Yeah, so again, whenever we're trying to do any sort of improvement work, bear in mind that it's helpful to go in with the mindset of, I don't know what the current state is. I want to understand current state. I don't know what the solutions will be. I want to involve the team who will be directly impacted by the solutions to design the solutions. And of course, you can have managers or as option B mentioned, have managers from other units that are really doing a great job to be able to come in and provide ideas. But it's always going to garner the best results if you can involve the teams who are directly going to be impacted in creating the solution. All right, so let's go on to 7, and I'm going to try to spin through these last few quickly.
Okay. What tool is the most appropriate in identifying priorities for action?
Okay, I'm starting to see a lot of C's in the chat. So maybe I can go ahead and dive into between all of the options, looking at what is going to help me prioritize what is the area that's causing the issue. So it's kind of going back to that 80-20 rule, and the best way to visualize that of all of these is going to be C. So Ryan, we can reveal or correct. Yeah. So the Pareto chart is again 80-20 rule. So it can help you visually to be able to see very quickly what is the area that you need to focus on and prioritize. Maybe Ryan, I can squeeze in one more.
Okay.
Question 8.
What approach best ensures loyalty, return visits by patients to your organization?
I'm seeing a lot come through the chat, so I'm going to dive in. I'm running out of time. I yeah, again, as I'm answering this question, what approach best ensures loyalty? So I'm thinking about it from the perspective of what can I as an organization do ahead of time or to ensure that our patients feel a sense of loyalty to the organization and want to return to the organization. So patient satisfaction surveys, those are helpful. Those are really helpful. But they're kind of an aftermath. So it might not be what I can actively do. It's more of just a tool that can help me to assess how I did do. So probably not patient engagement, as many of you answered. So patient engagement activities that can help ensure that patients feel heard and listened to, other activities around that. So B is an option. I've eliminated A. An effective complaint resolution process. Again, that is similar to A, that's aftermath. And it's also just something that someone would pursue because they've already had an issue with your organization. And if they're filing a complaint, I don't know what's the likelihood of them returning unless you can really do really good service recovery work. Customer service training, that can be helpful. So between B and D, Ryan, do we want to reveal? So B, yeah. So B, active work that your organization can do to ensure that you have good service and that you create an environment where your patients want to return. So Ryan, I know I stole 2 minutes from James, so I will turn it over to you, and we can maybe skip through the last couple of questions, but really want to thank all of you for your engagement in the chat and want to wish you the best of luck as you study and you go through the exam itself. Again, feel free to reach out if you have any questions.
Navi, we really appreciate you joining us today. Thank you so much for your time and for going over these questions with us.
Thank you.
So I would like to introduce James. James will be presenting the finance portion for us today. Thank you, James, for joining us. James is a director of financial planning at Kaiser Permanente. He has a master's degree in advanced studies and leadership of healthcare organizations. He's a certified public accountant, a lecturer at University of Washington, and he's also the co-chair of the Advancement Committee at Washington State chapter of ACHE. James, without further ado, I will hand it over to you.
Oh, thank you, Ryan. And thank you all for joining and taking time out of your Saturday to attend this course. And I'm happy to, really help you on this journey in terms of preparing for the upcoming fellowship exams. So this slide and the one that will follow is really a summary of the topics that will be embedded in the sample test questions that will follow. So, some of the key points that we'll touch on in the finance section of the presentation will be the financial accounting principles, and these are really rules and guidelines that companies follow when reporting their financial data. We'll touch on operating budget principles, and these are revenue and expenses that healthcare companies use in terms of in their operations. Capital budgeting principles. This is really important, and they don't typically follow, the accounting concepts such as net income. It's more about cash flow, and really the timing of cash flows are critical, and a factor in terms of what they end up investing in, since they have limited resources. We'll talk about reimbursement methodologies. This is like fee for service versus a capitation or a prospective payment system, many of the different ways that healthcare companies get reimbursed for their services. We'll touch on productivity measures. These are things that where we assess providers and healthcare companies' productivity in terms of providing services to our patients. And then financial controls. These again are procedures and policies that a healthcare company follows to be able to monitor and control the allocation of its financial resources. Okay, next slide, please. So, some additional topics we'll touch on is revenue generation, and the revenue is what we earn by running services to our patients. We'll talk about business models, and these are when we introduce a new product or service. This is what is used to present the opportunity to executive management in terms of offering, what our target market will be and what our anticipated expenses and revenues we expect to incur for these services. We'll talk about financial decision making. When our finances are really tight, healthcare companies often be making decisions to cut costs in order to maintain their profit margin. Asset management. This will really touch on where we maintain and track our equipment purchases and supplies and other assets that are used in the healthcare facility in terms of caring for our patients. Financing, a real big topic in healthcare, and that's really a key in terms of providing the resources and economic incentives in order to provide support to our patients and ensure healthy outcomes. Foundation work, another really big key use of a funding mechanism in healthcare, and this is used to providers and healthcare companies perform research and provide medical services. And then finally, we have supply chain, and this is really in any supply chain, which is a big factor in healthcare, where we collectively, have a network of systems to ensure medical and other healthcare supplies are distributed and provided to our patients for care. Okay, let's go on to starting with the first question, similar to what was done in the prior presentation, part on quality. I'll read the question and out loud, and then give you all an opportunity to provide your answers in the chat, and then we'll go over the question. So the first question asks, during the investigation of a merger or acquisition, why would it be prudent for a healthcare executive to obtain advice from someone other than internal legal counsel? And you have the choices here. So I'll give you a minute to kind of read through those and provide us your best answer. Then we'll review. Okay, let's go ahead and review this one. So, and I see a lot of in the chat, a lot of D answers. So, which I think that's, we'll probably end up seeing, but let's review the choices. A is regular legal counsel may not be objective. While this may be true, it's not a primary reason to obtain advice from someone other than internal legal counsel. So definitely not A. B talks about joint ventures, and the question asked about a merger or acquisition, which is different from a joint venture. Merger or acquisition is really you're consolidating two companies, and a joint venture is really a contractual arrangement to work together to achieve a common goal, to achieve profits. So definitely not B. C, I think external counsel has the ability to provide services in a more economic and timely manner. Definitely not more economic. And if anything, it would be more expensive. And then finally, D, specialized expertise and need in this area, which a lot of you, I think, got. And really, it's, I think in this case, it's about making the decision to hire outside business counsel. It allows a business to receive exactly what advice they need and when they need it. So I think here D are probably our best choice, which seems a lot of you had kind of guessed. And let's see what the answer is. And it is D. So great job. And sounds like a lot of you got that right away. Okay, next question. So the ratio of output to input is a measure of, and it gives you choices below: liquidity, process, productivity, or the work environment. So let's see what you all think, and we'll review. Okay, I've seen a lot of C's in the answer, and but let's look at the choice of liquidity. That's about your ability to pay off your short-term obligations. So it really doesn't have anything to do with output to input. Process, a process is more about specific steps in that process that lead to some type of outcome. So wouldn't say that would really relate to what's being asked. And then productivity, productivity is a measure of how efficiently a person completes a task. And it seems to be a good definition of what's being asked here, which it sounds like pretty much everyone got that one. But I think C would probably be the best answer. And then the final one was D, to work with the environment. That's more about the environment is the setting, social aspects, and physical conditions that the individual performs in their job. So I think here C is probably our best answer. And then C, and sounds like you all got that right away. So great job. Next question. Okay, a hospital that continuously assesses the interests of the community and searches for ways to meet these interests can be described as the following. Predatory, market-oriented, market optimized, or differentiated. Let's see what y'all think. Okay, sounds like we have a mixture of response between B and C. So, but let's review the choices. So predatory, wow, sounds pretty bad to me. And actually, it really refers to a pricing strategy in which a company offers its products or services at a very low price point, really trying to drive out competition. So definitely, I would say A would make sense. B, market oriented. That's about where the healthcare company prioritizes the needs and desires of the consumers and creates services that satisfy them. Well, that sounds like a pretty good definition of what's being asked. But let's look at the remaining choices. Market optimized. That's more about doing a better job in reaching your business goals and making adjustments to your marketing efforts in order to achieve that. So, but it's not really considering the needs of the community. So I don't know if I would choose C either. And D, differentiated. That's that's really about providing superior level of value to your customer to help distinguish yourself from your competition. So D, I would eliminate as well. So I think between B and C, probably B is a better answer. Okay, and it is B. But yeah, it's just really just understanding. I think this question and even the prior one, it's more about understanding the definition of these terms when attempting to answer these questions. But I think, in this type of question, you could eliminate, A and D pretty quickly, and really it's between B and C. And between those two, it's really understanding what those terms mean. Okay, let's go to the next question. Net income as a percent of gross revenues and return on equity are two most important indicators of profitability, creditworthiness, market strength, or your cash position. Let's see what y'all think. Okay, so let's review this one. So first thing I would say, let's define what return on equity and net income is. Return on equity is just your net income divided by your shareholders' equity, and then net income, obviously, that's your revenue less your expenses. So think about it in those terms and what's common in terms of what's being asked here. So profitability is you're measuring your organization's profit relative to its relative to its expenses for A. So that sounds like could be a pretty good choice in terms of what's being asked. Now that we understand the definition between net income and return on equity. Creditworthiness it's more about how a lender will tell if you're going to default in your debt obligation. So really doesn't have anything to do with profitability. Return on equity or net income. Market strength, that's more about the market's power to perform on a relative basis versus other markets. So it doesn't really have anything to do with profitability necessarily. And cash positions, that's more about the amount of cash you have in your bank at any point in time or what's on your balance sheet. So, you could have a lot of excess cash on your balance sheet, but your profitability could be poor. Or vice versa. So I don't think I would choose D as an answer either. So I think out of these choices, A is probably the most appropriate choice because profitability refers both to return on equity and net income. And it is A. But yeah, just again, it's really, in this case, as others, it's really understanding the terms and definitions behind what's being asked in the question. And I think, my belief is a lot of that's what is asked for in the finance section, and it's a good way to kind of prepare in answering the questions being asked on an exam. And then I would encourage you to use flashcards to help prepare yourselves in that way. Okay, let's go to the next question. Okay, when reviewing assets, which element is the most important indication of an organization's liquidity? Is it buildings and equipment? A, long-term investments? B, cash and short-term investments? C, or land and other assets? D. We'll see what you all think. Yeah, so I think this one's a pretty obvious one. One thing to recognize when we're talking about liquidity, it's how easily an asset can be converted to cash, okay? And if we look at the choices here, even though C was an obvious one, A, B, and D are all long-term investments. And it's something a company intends on holding at least over a year. So those are all your long-term assets. So not easily converted to cash. And of course, cash and short-term investments such as treasury bills are something that are easily converted to cash. So that's, I think, C is the best answer here, probably the most obvious one. And it is C. That sounds like everybody got that pretty quickly. So good job. Okay, next question. Okay, financial statements are important in order to identify, measure, record, and communicate in dollar terms the economic events of the organization, serve as a control mechanism for budgeting, provide detailed financial information for control at the department level, or does it provide staffing guidelines to human resource managers? Let's see what you all think. Yeah, I think as I go through these questions, as I go through these answers, A sounds like it's a pretty good definition of a financial statement. And when we look at our financial statements, it really is about providing information that provides the results of the operations and financial position and cash flows of organizations. So I think what they're describing in A sounds like to me a pretty good definition of a financial statement. But let's look at the other choices. B, serve as a control mechanism for budgeting. That's really probably a secondary purpose of the financial statement. And then C, provide detailed financial information for control at the department level. Well, that's really doesn't exist in your financial statements. It's more in your subsidiary ledger. And then D, provide staff and guidelines to human resource managers. That's independent of your financial statements, but yeah, I think A in this case was the most obvious choice. And it is A. And it sounds like everybody got that as well. So great job there. Okay, next question. Okay, so in most cases, the most favorable audit opinion that an organization can receive is it a qualified opinion, adverse opinion, disclaimer of opinion, or unqualified opinion? So what do you all think about that one? And it sounds like a lot of you have chosen A from the answer, but so let's go through the choices. So when we talk about qualified opinion, that's when an auditor isn't confident about any specific process or transaction that prevents them from issuing a clean report. So definitely don't want to receive a qualified opinion in your financial statements. Um, and certainly investors don't find a qualified opinion acceptable. So that's why they're qualifying their opinion because they found an issue when they audit your financial statements. Adverse opinion, well, that sounds pretty bad to me. And that's when the auditors aren't satisfied at all with your financial statements and they discover a high level of material misstatement that creates a situation which the investors will mistrust the company's financial statement. But it's in the wording, you could see in the answer, it's obvious that it's, it's probably the worst type of opinion you can receive. Disclaimer of opinion, well, the auditor's not issuing an opinion at all. And then in fact, they're trying to distance themselves from the financial statements. So definitely not C. And then finally, D, unqualified opinion. So this is considered what they call a clean report, and an unqualified opinion doesn't have any kind of adverse comments and doesn't include any type of disclaimers or clauses about the audit process. So this is the type of opinion that businesses most often expect to receive, and from the auditors. So I think in this case, D is probably our best answer in terms of what's being asked, and it is D. So just again, understand the definitions behind these different types of opinions the auditors can receive, and that will really help you in answering the question. But really, if you look at this, I think a lot of you have done that. You can pretty much in most of these questions you can eliminate at least two of the four choices and be adverse opinion or disclaimer opinion pretty easily to eliminate, and then you're really just left with qualified opinion and unqualified opinion, and that's really about understanding the definition behind the different types of opinions. Yeah, it's the wording that itself is can be misleading. I would agree, and that's where just getting those terms and definitions down is important and will help you answer these type of questions. Okay, next question. Okay, the purpose of statement of operations or income statement is it to present the financial position of the organization at a specific point in time, present the reasons net assets change from one period to another, present cash receipts where they came from and cash disbursements where they went to, or present the operating results of the organization over a period of time. Let's see what you all think. Okay. In this question, doing is testing your knowledge of the different types of financial statements and their purpose. So again, I would encourage you to read up on the definitions. But let's say you didn't know anything about, really not familiar with the different types of financial statements, what they were. In the question and the answers are given is a big clue in the right answer. So they're talking about the purpose statement of operations. Look at in D, look at what it says. It says present the operating results of an organization over a period of time. That's a big clue on what the answer should be. In A, they're describing a balance sheet, which has nothing to do with the statement of operations or an income statement. And they give you a clue. When you talk about a specific point in time, that always refers to your balance sheets. That's your assets and liabilities and your equity, which again doesn't have anything to do with the income statement or your statement of operations. When they say a period of time, that's a big clue. That's an income statement or a statement of operations. Now B is the reasons net assets change from one period to another. That's your change in stockholder equity or your equity section on your balance sheet. So it doesn't have anything to do with the income statement or statement of operations. Cash receipts and cash disbursements refers to a cash flow statement. Again, nothing to do with an income statement. So they're, again, testing your knowledge on all the various different types of financial statements and their purpose and what information is contained in them. So D is the only one that mentions operating results and mentions a period of time, which is aligned to your income statement. So I think D is our best answer here. Again, just it's really getting the terms and definitions down, and helping you answer these questions. Okay, let's go to the next question. Okay, ratios that measure an organization's long-term liquidity are called A, liquidity ratios, B, profitability ratios, C, capital structure ratios, or D, efficiency ratios. I'll give you guys a few minutes and let's see what y'all think. This is I would say it's a more complicated question. So I could, so I want to give you guys a few minutes to think about it. Okay, let's walk through this one. And okay, so let's look at the choices. So we're being asked ratios at measuring long-term liquidity. So liquidity ratios, well, when we talk about liquidity ratio, it's, again, remember the definition, it's we talked about before, it's a company's ability to pay its short-term obligations. So it really doesn't relate to a long-term liquidity. So I think you can eliminate it off the bat. Profitability ratios indicate how efficiently a company generates its profit and value for its shareholders. So it really doesn't speak to liquidity at all. It's more about profitability that the healthcare was able to generate. I would definitely eliminate B as a choice as well. Capital structure ratios, these are financial ratios that measure a firm's long-term stability and structure. And it's calculated by taking your total liabilities, meaning your short and long-term liabilities, and dividing it into your total equity. It's often used to measure any type of going concern around a healthcare company. So that seems like a pretty good, now that we understand the definition behind that, a pretty good choice in terms of what's being asked here. Efficiency ratios, that's where you're measuring healthcare company's use of its assets to generate revenues and its ability to manage those assets. So it really doesn't speak to liquidity at all. So I think out of the choices given, I believe C probably would be our best choice because it's the only one that really is long-term liquidity. Let's see what answer it's C. Again, admittedly, this is a more complicated question, and it's really about just understanding the definition behind the different types of ratios and what their purpose is. Not necessarily memorizing the calculation itself, but the purpose behind the different types of ratios and how they're used in assessing healthcare companies, efficiency or profitability. So I think again, understanding the definition will help you answering these type of questions. But yeah, this is more complicated question. Okay, let's go to the next question. Okay, so the purpose of the strategic financial plan is to look into the future 10 years to determine the business will look like. B, translate the strategic plan in next year's objectives. C, convert the operating plan into monetary terms. Or D, identify resources that will be necessary to accomplish the strategic plan. And I'll give you guys a few minutes to see what you think in terms of your best answer. Okay, let's review this. And before I do, I want to talk about, when we talk about strategic financial plan, what that actually means. And really when we talk about strategic financial plan, it really is a roadmap to understand what direction your business is headed and why. It's about financial planning strategies for your business that can help determine where to spend its money, time, and other resources. And it really sets the overall goals for your business and develops a plan to achieve them. Okay, so with that information, let's take a take a look at the different choices. So A is look into future 10 years, determine what your business will look like. Well, it's really about ensuring the organization is following its plan to attain its short and long-term goals and really maximize value for the shareholders. So A is I wouldn't say is a good choice. B, translate the strategic plan and next year's objectives. Well, keep in mind, under a strategic financial plan, you're taking a step back from your day-to-day operations and asking yourself where's your business headed and what its priority should be and what those goals should be. So definitely not B. C, convert your operating plan into monetary terms. Well, no, it's really about setting the overall goals for your business and developing a plan to achieve them. That's what a strategic financial plan is. Definitely not C. And then D, identifying the resources that will be necessary to accomplish the strategic financial plan. Well, that sounds like a pretty good definition and how we would describe in a strategic financial plan. But financial plan strategies for your business really can help you determine where to spend your resources and your money and your time. So I think D here is our best choice. And it's D. Again, what helped me understand the question and eliminate some of these choices is just really understanding what the definition behind a strategic financial plan is, and that's really the key to eliminate some of these choices. Okay, so 11. Okay, a zero-based plan or budget could be best described as A, starting each planning or budget cycle with a clean slate. B, adjusting expenses based on realized volumes. C, allowing unencumbered to be transferred to the next year. Or D, limiting your department managers to only expenses they control. Let's see what y'all think. Yeah, so it sounds like a lot of you chose A. And, when we talk about a zero-based plan or budget, it's really about where all expenses must be justified for the period. So it's starting from a zero base or starting from scratch and building up your budget. And with that definition, starting each planning or budget cycle with a clean slate, that seems a pretty good definition of what's being asked and what a zero-based plan or budget is. The other choices B, C, and D. B is you still have to use data or information of expenses based on the current year, so it's definitely not B. C is you're just rolling forward your budget from the prior year, so definitely not C either. And then D really doesn't have anything to do with zero-based budget approach at all. So I think here A is our best answer, and they provide us a pretty good clue. When they talk about starting with a clean slate and based on what's being asked, what a zero-based plan is. So I think A is our best choice, and and it sounds like pretty much everybody got that. So great job. Okay. A managed care plans that exert the most control over providers and therefore save the most money and provider payments are A, indemnity plans, B, PPO, C, closed panel HMOs, or D, point of service HMOs. Let's see what you all think. Yeah, I think this one's, pretty obvious, and especially, um, you know, being familiar with the different types of plans. And, indemnity plans, there's no provider network. Where basically the patient can choose whatever doctor or hospital they want to go to. A PPO, again, the member can go outside the network. Of course, they end up paying a greater percent of the costs. So definitely not B. Point of service, HMO, again, that's a hybrid between HMO and PPO, but similar to PPO, they can go outside the network. So really, I think C is our best answer here, and then it sounds like pretty much everybody got that in terms of the answer. So yeah, I think this was a pretty obvious one. Okay, let's go to the last question. Okay, productivity measure that takes into account the level of skill required to accomplish the task is A, hourly rate, B, paid hours per unit of service, C, scheduled hours per unit of service, or D, labor compensation per unit of service. Just give you a few minutes to put your best answer in the chat. Okay, so on this question, we're asked to determine what components that are needed to measure productivity that takes into account the level of skill that's required to complete the task. So it's A, hourly rate. Certainly, yes, that's definitely a component of what we need to answer this question. But by itself, it doesn't provide us enough information to address what's being asked. Paid hours per unit of service. Again, like A, it's information we need to answer this question that's being asked, but by itself, it's not enough information. The scheduled hours per unit of service, we really want to look at actual hours, not scheduled hours. So I eliminate C as a choice as well. So we're really left with D, labor compensation per unit of service. And really what that is taking A and dividing it into a B to calculate the labor compensation per unit of service. Because the question is asked the level of skill that's required to accomplish the task. And when we measure productivity, it's usually on a per unit of service basis. So I think here D is our best choice. It sounds like a lot of you got that in terms of your answer. But it's about how much a business pays its workers to produce 1 unit of output. And that's really what the question's asking us. So, but this is the final question. So any questions that wasn't clear or you want to clarify? I mean, again, a lot of these questions, it's not real obvious. And it takes a little bit of, really reading in the question and just really understanding what they're asking. But happy to go over any of the previous questions we went through to clarify. And feel free to come off mute or put something in the chat if you want me to review something that maybe just didn't make complete sense when we went through it, and it will be helpful to go back through it again. Okay. If there's nothing else, then I want to thank you for, taking time out of your Saturday. And, certainly if there's any questions, let us know. But I thank you for your time, taking time out of the weekend um, to join us on this prep course. I'll turn them back over to you, Ryan.
Thank you, James. Thank you everyone for joining. Special thanks to Navi and James as well for presenting these questions to us in these, tougher areas that all of us may not be as familiar with. So we really appreciate it.
Yeah, and one thing lasting comment I would provide to you guys, especially for the finance section, we have there's flashcards, resources that are on the ACHE website. So I'd encourage you to use that and the other resources that are available in terms of helping you prepare for the exam. I think finance has a lot of terms and definitions in it, and really, the flashcards really help out with that. So think about using that and the other resources to help you prepare for the exam, and I think that would go a long way in preparing you.
And we do have some flashcards. One of our committee members lends out once you've scheduled your exam. Please feel free to reach out to us and I can put you in contact with her.
Okay, well, thank you all, and have a good Saturday.
Thank you, everyone.
Thank you.